Hello, everybody, and welcome to Street Smart Investing. I'm Albert, your host, and this is another episode. This is actually something different that I'm gonna do. Um, this episode is gonna be, I'd say, like a special edition episode. So, how can I say this? I don't want to say too much info because a manager for investor relations from a certain company, a public, company on the stock market, they recently reached out to me with some good news. And basically they want me to take a survey, and I don't have to explain anything, but I'm going to do so in the video. And obviously I'm gonna evaluate the company. There's two companies, and basically in the survey it's rated like a 1 through 5, and I'm gonna go over that with you today, like right now in a few minutes. And so basically, with the interview that I'm doing for this video, I'm gonna show the survey, and then I'll evaluate the two companies, and then on top of that, what else can I say? Um, I guess that's pretty much it. Um, I I guess I can talk about the competitors, or maybe who they're up against and stuff. But no, I won't do that. I'll just keep it at that. Since I don't want to get too much into it. But yeah, that's pretty much it. Let's do that then. So there's just two companies. Um, what I can say about them is that the two companies, they're in similar sectors. It has to do with like diversifying real estate or real estate in general. One is that diversified. I can't remember if the other one is or is not. And we'll go over these companies, and yeah. The survey is pretty short. It's about 10 questions. Um, I think at the last question they want me to explain. Um, that's a little more confidential. Um, that I don't think I'll share too much. That's a little more private. But I guess they want to see if I'm willing to buy more shares or not, or what I think of the company, or general information. But yeah, I mean, I like that sector, so I can say that. So yeah, that's pretty much it. So let's begin. Let's get to it. Let's get to it. Let's show it off. So so I got it all set up here. Let's go to the survey, and it is legit. So let's begin. These are the two companies. Let me close my Robinhood. I don't want people looking at my account. So the two companies are Safe Hold Inc. and iStar. So first one up, and the survey is mainly for Safe. The survey is not really for Star, but in the email, those two companies were in the email, but the survey was for that one. So I mean, maybe that's a sister company, or who knows. But yeah, these two companies, they're in similar sectors. So let's begin. Let's do the survey. I don't want to hold you guys up. So let's begin. Safeholder Investor Feedback Survey. So they say, thank you for your interest in Safehold. As we work to continue to improve our investor relations effort, your feedback for this 3-minute survey is very important to us. So now, which of the following describes you best? Obviously, that would be me. But broker, financial advisor, these guys, they're actually, certified and stuff. They've taken exams. These guys too, these registered investment advisors, that would be like from a bank usually. And then institution investors, These are guys in the company that are invested into the company. So pretty much these are big titles, is what I can say. These three, these guys they're in it to win it. They're pretty much in the company, or they put out some sort of effort towards the company. So yeah. And this is a good question. You know, the reason I'm showing you guys this survey is because in order to be an investor and a long-term investor, you need to take yourself seriously. And you know, it's questions like these that even though when you start to invest, you might think of certain questions and you might do your research, but research never ends. As a really tremendous good investor, the research and information just never ends. There's always competition. There's always new ideas. There's always feedback. There's always, you know, technology and just different, you know, there's always a different perspective in how to do things. And then, you know, people always want to find ways to do things better. And then also, it's always good to refresh on why and how you invest, because your opinion may change and the way you think might change and the way you invest might change. So you know, adapting to something is very, very critical in the investment world. So yeah, that's all I gotta say for now. So let's continue this survey. And you know, this can be related to you guys as well. So not only me, but you know, to other people as well that are serious investors. You know, and again, you don't have to be, you know, a millionaire to invest, because we now live in a world where, you know, you can even start off with as little as, like, you know, $1,000 or less than that, $500, $100, and just work your way up. And you know, just figure out what you like, what your risk tolerance is, you know, what you can do, how often you can do it, and you know, just do what you can. So the next question is, approximately what is your current position in SAFE? I want to just pull this to the side. I don't want to share this information. That's a little too private. But I'll go on to the next one. So number 3, approximately what was your maximum position in SAFE? I'm gonna cover that as well, so you guys won't see. I'm not gonna share that information, but just a question. Question 4: how would you rank the importance of the following attributes of SAFE? This I can show publicly. I don't mind doing that. Or you know, just general info. How would you rank the importance of following attributes? Disruptive business model. That to me, and I would say that is very important. A modern, and then they I like that how they state that what the general info is about that. What do they mean by that? A modern, more efficient customer solution to a large market. Yep, customers are always important, because that is your sales slash sales. Those are your sales pretty much. Okay, so above market bond like cash flows. I don't like the word bond. Bond to me is like you gotta wait forever to be paid back. But it says above market. So it says ability to generate attractive risk adjusted returns. I'm thinking about this one. It says above market bond like cash flows. I'll come back to that one. Portfolio growth. Yes. Earnings growth. I know it's hard. I gotta be honest. I know it's hard to generate earnings. I mean, as an investor in general, I know it's just hard. It's hard. Especially even after the COVID or before the COVID, it's just hard to do. Okay, above market bond like cash flows, somewhat important. I'm gonna put thinking of putting number 1. I'll put it in the middle, somewhat. Generate attractive returns. I mean, you can't have it all. I'm just being realistic. If you had to choose between portfolio growth and earnings growth, that's a tough one. I've never heard of that one. The common one is revenue versus, top line versus bottom line. And to me, I'd rather take bottom line, even though most people prefer top. People want sales other than the net income, but I'm the other way around because that's money that can be put in your pocket, but the sales, as long as you can maintain them. Portfolio growth, yeah. So earnings growth, I'll put somewhat. They don't have to grow every quarter, but if they can grow it one quarter out of the year, that would be nice. It's not a major issue to me. I'm very understanding when it comes to that. I know it's a tight competition, so I get it. But yeah, if they can just diversify and just find the next big thing, I guess that's pretty much what they have to do. This is very important. Oh yeah, that's a no-brainer to me right away. Dividend growth. Oh yeah. So what did I score 5 on? I put a 3. Portfolio growth, yeah. I wonder if they mean price. I'm guessing price. They didn't really state that, but well, I'm gonna say the meaning for this one is when they diversify the portfolio. That has to be a lot to do, but over time that can be achievable. Unrealized capital appreciation. So basically what this means is when you buy the stock, right? Once you buy the stock and you have not sold, pretty much you're holding on to it. So until you sell, basically the whole time you're holding, that holding period, that's your unrealized capital appreciation. So basically that's if you gain. You should gain, but well, obviously because of this stock, but in relation to this stock, but in general, you want the stock price to go up. So what they're saying is, let's say I bought any stock in general. Let's say I bought a stock today that was $1. Then tomorrow it was $1.15. And then the week after it stood to, let's say, another 10 cents the week after. Those 2 weeks, one week I made 10 cents, the next week I made 20 cents. I still haven't sold in those 2 weeks. So on paper, which is, they say on paper, which is the holding period, those 2 weeks that I've been holding, I've gained 20 cents in unrealized capital, meaning I've gained it, but I haven't confirmed it. So what I mean is, on your profile or whatever app you use, you've gained the money, but you just haven't confirmed it yet. You haven't sold your position. So once you hit that sell button, that's when you actually receive it. So it's like pending, pretty much. So basically, you're just holding on to the stock until you sell it for a profit. So you could say that's just sitting profit. That's just sitting profit. It's not actual profit, if you want to use that other term. But they use it as unrealized capital, because that's money you gain, but you haven't accepted and sold your position. You haven't accepted to say, yes, I'm gonna sell, and then gain your profit. So I would say, yeah. To what extent are the following items obstacles to initiating, increasing your position? Growth post COVID. They want to know if it means anything to you as a factor, if the company is still growing after COVID. Obviously, yeah. I mean, that's almost a no-brainer. So yeah, trading volume. I know what this means, obviously, but definitely for day traders, I would say I'm in the middle. I'm leaning in the middle. I mean, I watch it, obviously, because the more volume, that's one of the factors when you trade, day trade especially, the volume and then the float. But yeah, volume is important, because once it starts going up, yeah, it plays a factor depending on the past history. And if it's shortable or not. But it's a growing stock, so it's a good stock. I looked at it before even started the video, so yeah. Valuation, to me, that is, I know a lot of people don't care. I think the average investor right now would click a 5. Valuations lately, that's all I've been doing. Very important to me. Very, very important to me. Dividend yield. You know what? I'm gonna be in the middle with this, because I know it's hard for companies to grow meaningful, and it's just tough. It's tough. Competition is so fierce right now. I mean, with COVID, some companies, smaller companies took a hit. Then all these, some companies even want to go public just to survive. Others, it's gonna be one hell of a year. I think towards the end of the year, there's gonna be a lot of very micro cap companies that are not public. Like all these very, very small businesses is gonna go out of business. Yeah, I mean, like I say, people think it's all, you know, good and hot and dandy right now with everything opening up, but there's other people struggling. I mean, that can be advantage to other companies, but again, even a restructure period is still going to take time. Even acquisitions, everything is just going to take time, you know. And it's just it's not going to be, you know, an instant gratification, you know. It's going to be a period where, you know, some businesses might be iffy if they want to invest at this moment and where, and it's just I don't know. That's just me. It's just, even me investing this year, it is too, like I said, the stock market is too expensive. I'm sure many people would agree with me on that. It's just way too expensive. These are the highest prices I've ever seen, and then earnings haven't even come out yet, and then people are expecting so many all these top companies, you know, Apple and, you know, like just so many companies, oh, they're gonna outperform and everything, and just, yeah, it's nuts. Corporate structure, I think I'm gonna make this video into 2 separate videos, because I know I'm taking too long. I'm just excited because I haven't done a video in a while, but yeah, corporate structure, definite. Oh no, a 5 is usually yeah, sorry about that. Majority ownership. I was a majority owner. One can only dream. But anyways. Or you mean the company iStar majority ownership, unless they're owned by someone else? I'll put what might cause you to sell or reduce your exposure to safe? Rising interest rates. No, because that actually, they do better in that environment. That's why. iStar majority ownership. Stock price increases. Stock price increases. Price hitting targets. I'm going to give it a 4. Everything's hitting new highs. Give that a 4. New competition. I'm going to say somewhat. Tightening spreads. Lower prices. somewhat likely to reduce tightening spreads. How valuable do you think growing unrealized capital appreciation is today? Very valuable. Tightening spreads. What was the base question again? What might cause you to sell? For me, honestly, yeah, it would be the stock price. Shouldn't give it a 3. Any other things you'd like to share with management? You know what? I am, and I'm gonna share this publicly. Try to hold the camera. So Verena, what I wrote was, I would like to see if data centers can be acquired into the portfolio. Done. Let's click done again. Contribute your health status to help. Yeah, I'm not doing that. I bet if they paid people who didn't want to take it, they might second guess it. 98% of the Fortune 500 companies rely on SurveyMonkey for people-powered data. Yeah. So there you go. Thank you for watching, and I will review these companies.